Hey y'all, how y'all doing? Welcome to BGTU YouTube. So I was actually going through some old presentations and doing some updates, and I came across one I thought was going to be like super duper beneficial to a lot of people. So what I'm going to do is share this with you guys. It is basically called the opportunity cost, the cost of holding red trades. Now, I know I'm not the only one that's done held some red trades. So I want to show you the opportunity cost of doing that. I am going to be using my actual old trades. This is actually from like end of 2020, beginning of 2021. And this is also going to show you the impact of journaling your trades and taking screenshots and having things, because I can go back and look now and be like, what in the world was I thinking? But I want to share this with you to hopefully increase your chances of not doing this and hopefully help you learn the lesson without you learning the lesson. All right, let's get to it. Hey, y'all, let's get into this opportunity cost, the cost of holding red trades. Okie dokie. So, what is opportunity cost? It represents the potential profits that you miss out on when you choose to sit in red trades. And you don't have a trading plan. That's the caveat, that trading plan that you don't have. So, what does this look like? So, this is my actual Robinhood account from like late 2020, early 2021. I have 18,000 is sitting in Robinhood that could be used for another opportunity for me to profit, but it's tied up in these red trades. I only got $812 working for me, which ain't gonna get me to where I'm trying to be sitting in all these red trades. This is why you need to learn to cut your losses. I hadn't mastered that this back then. I hadn't mastered that. But we're gonna break down some problems that's on this screen. Problem number one, I am in 9 different trades. Realistically, you cannot effectively manage 9 different trades. You just can't. Currently, I'm only in 2, maybe 3 positions at any given time, because even if I'm swing trading, I still need to manage those positions. So I need to make sure I ain't doing no mess like this. And it's funny because I told you guys I was actually looking at some old presentations. I was updating some things. And when I saw this, forgot I was looking for over here. When I saw this, I was just like, OMG, flashback to the past. I don't necessarily remember these trades and all that, but I was, first of all, I was like, what is QTT and what is VLDR? Where I look them up, they don't even exist no more. Um, but it definitely showed me how much I've grown, and some of the lessons I had to learn that I paid a pretty penny for. So, like I said, this is what it looks like. I'm down like almost 18K. And so I've got to make some decisions on some of these trades. Now, these are 219, these are 2021 expiration dates. February 19th. This is March. I've got some Aprils. Baba down here in June. So, and as you can see, like I was holding some pretty hefty size positions in some of these contracts that I have. So but this is what it looks like. Opportunity cost miss, because I'm looking at these red trades without a plan, trying to figure out what to do, and obviously I didn't do a good job of figuring it out. Now, most people won't tell you this part of their journey, and the reason I even decided to tell you, because honestly, it's part of the journey, and I'm not ashamed of it. It is what it is. My hope is, by me sharing this part of my journey, you look at red trades differently, and hopefully you decide not to hold on to them if they are not meeting the criteria of your plan or they've hit your stop loss, because this is how you run out of money to trade and then you're out of the game. So you need to take a good look in the mirror. Like I ain't got no mirror, but pretend you got a good look at the mirror and ask yourself, what in the world are you doing? If your account looks like this, you're in way more trades than you need to be. The majority of those trades are red. You have to take that look in the mirror and ask yourself, what are you doing? Because you're not doing something right. You're just not, period. So you're going to have to find the root cause of that problem and you're going to have to fix it. I'm saying this because this is literally what I did. I have to look myself in the mirror because I'm the one clicking the buy and sell button. And I have to say, what are you doing? Because what you're doing is not working. Or even if it does work out for me, the stress and mental anguish I put myself through in order for it to work out was crazy ridiculous. And I didn't need to do that. So, what are you doing? You got to ask yourself that. So, the cost of sitting in red trades, one, you miss out on profitable trades. You too busy trying to manage these red trades. You're missing out on trades that you could have taken that could have been profitable. So, that's one of the things you do. Delayed recovery. If you sit in red trades without a clear plan, you might miss opportunities to manage and recover losses. So sometimes I have to take a loss and I'm able to go recover that loss in a different trade. But you sit in a loss too long, it's almost like you give up hope and either you just let it play out or you take the bigger loss when you should have taken the smaller loss. A lot of this happens because you don't have a plan. And when you don't have a plan, it's really hard to make a decision of what should I do. This is how, I mean, there's other things that contributed to this, which is like the loss of $15,000, my first big trade. That's why I teach having a trading plan so much because of all these things that I went through. And it was because I had a trading plan back here, but obviously it wasn't as tight as it is now because I was still making certain mistakes and I wasn't taking care of them the way I take care of those mistakes now. So at some point, once again, you have to look at that mirror and say, what are you doing? So, number three, the psychological stress and the emotional biases that this creates. I mean, uncertainty and lack of direction can lead to increased psychological stress. 18,000 in the hole. Now, I look at that as like you could almost bought a car cash. You could have went on a really nice vacation. You could have just went and bought whatever. You could have done some things with that 18,000 in losses versus giving it to the stock market or whoever else that, got the money and then just sitting in it. Emotional decision making often leads to impulsive actions based on fear, greed, or panic. And we've all been in fear, greed, or panic at one time or another, which can further exasperate the losses and hinder rational trading decisions. So when you're in psychological stress or you're having emotional biases, irrational trading decisions tend to take place. I know I ain't the only one that's been there. And like I said, I'm sharing this because hopefully, if you're there or you've been there, one, you could attest to this. And two, if you're there, hopefully, this is going to give you a path to get out of there. Number four, it's insufficient use of capital. Holding on to losing trades without a plan ties up capital that could be deployed somewhere else that's going to be making you some money potentially. By not cutting losses or reallocating your resources, you miss out on other trading opportunities that could have generated returns. So, at some point, when are you going to cut those losses? When are you going to exit the trade? Like I said previously, a lot of this is because your plan was not clear. And when you're in the market and you're not operating in clarity, it's really hard to make good trading decisions. Missed learning opportunities. I know you're gonna say, "What I'm gonna learn from that?" Y'all gonna learn what I'm teaching y'all right now if you do what I tell you to do. So each trading experience, including losing trades, provides valuable learning opportunities. By not having a trading plan and failing to analyze and evaluate your trades, you miss the chance to identify patterns, strategies, and grow as a trader. Reflecting on trades, even losing ones, can contribute to your trading education and development. So these aren't necessarily, I mean, it's paying the cost to play with the big boys. I mean, $18,000, 15,000, those are some big costs to play with the big boys. And hopefully your losses were not as large as some of my losses. But you have to take the losses, but you also got to get the lesson. If you don't get the lesson, you keep taking the losses, and you're going to keep taking them until you eventually learn the lesson. So, my goal is to help you either not take those lessons at all or make those lessons really small so you can move on and get to growing more. Number six, lost time and energy. It is exhausting trying to manage a red trade, period. Without a plan, you find yourself spending excessive time and energy trying to make on the fly decisions, which we know in the stock market, on the fly decisions rarely work out in your favor. You're trying to analyze market conditions, deal with emotional stress. The time and energy could be better utilized on trades that's going to make you some money versus sitting in this red trade trying to figure out what you're going to do. So the time and energy you're spending to try to manage this red trade, you could be spending that in a green trade. So without a trading plan, the opportunities cost that this is costing you is missed profitable trades because you can be focusing on something that's going to grow your account versus take money out of your account. Delayed recovery. So it's delaying the opportunity for you to get into a profitable trade to recover those losses. Now I'm not telling you to revenge trade, but if you get out of a trade for a small loss, you can take another trade and recover those losses. Psychological stress. It is stressful to sit in 9 red trades. Trust me, as y'all can see, I done been there. So it puts you in a different mindset, and oftentimes you can't think clearly because you're trying to figure out what to do. It's definitely inefficient use of your capital. So I need to be in green trades. Now, I'm not saying every single trade you take will be green, but overall, I need to be holding all those red trades. They need to be green. I shouldn't be holding 9 trades and they're all red. Miss learning opportunities. It's too many. You're in too many trades to get the lesson from all of them. So you want to be very strategic in executing and sitting in trades so that when you do mess up, it's easy to get the lesson. It's kind of hard to see the lesson when you got $18,000 in red trades sitting in front of you, and the wasted time and energy you spent sitting up there looking at that day in and day out, not knowing what to do when you could have done something different. And I'm telling you this because I know it's hard when you're in it. It's real easy for me to sit here right now, but don't forget that was my account. It's real easy for me to sit here right now, but I remember what it felt like when I saw that picture. I was like, oh, I remember this. And it was just like, man, that hurt. Now, if I'm in like 2 red trades, that don't really bother me because I'm only in 2 or 3 trades at a time, and they don't look like -$9,000 or -$5,000 anymore. So red trades don't necessarily bother me, but they ain't gotta go. I ain't gotta let them go that far. You ain't gotta let them go that far. So, having a well defined trading plan helps mitigate these opportunities by providing clarity, structure, and guidelines for decision making. So, when I keep preaching, have a trading plan, have your trading plan, trade your plan, all that stuff, this is why it provides you clarity, structure, and guidelines for making decisions. When you don't have those plans and those candlesticks are moving on the chart, it's hard to make good decisions. So how do we fix this? Because I mean, it happens. There's got to be a way. I know you're not gonna like number one, but it is what it is, and I've had to do it. Sell them and take the L. Take the L, but learn the lesson. The remaining money could be used to get into other profitable trades. Hold on to them until they turn profitable, but that's only if you have a plan. If you're in zero DTEs or weekly, that's probably not a good plan. So it's going to depend on your trading plan and the holding time that basically you had. Have a plan that includes at what point will I cut my losses. Obviously, y'all can tell from being down $18,000 on 9 different trades, I didn't have a plan for when I was supposed to call it quits. And like I said, this was in the early stages of me realizing I need a plan and I need to execute it. And for me, I had one, but I wasn't following it obviously very well. And two, it probably wasn't very clear. So I didn't know what to do. And like I said, I'm saying this, but lucky for me, I learn quick. I take my hits, I pull back, and I say, girlfriend, what are you doing? What is the lesson you need to learn? Because you need to move on. You ain't got time for this. Because even if those are my two biggest losses up until that time, I've got a huge $15,000 loss. Now I got an $18,000 loss. How many more of those losses can a person realistically take and stay in the game? So you have to think, and I don't care if it's $500 and $2,000. The amount is not really the issue. The thing is, you're doing this over and over and over, and it's not getting you to where you want to be. So you have to learn the lesson and then fix it. Okay, this was. So, how do we recover from a losing trade? And this is just in general. You have to journal the trade. Like I said, when I saw that and I was like, wow, I remember, I actually pulled up my journal, which I actually didn't put in this presentation. And I I read what I wrote, and it was, and this is a synopsis, this is not word for word, but it was like, I feel horrible. I didn't really have a good plan. I missed so many things, and I listed all the things that I missed in these different trades, and I put, how can I do better? Why? Because my goal is to take my weaknesses and make them a strength. But I have to be honest with myself, and I have to be able to recognize what those weaknesses are so that I can work on them so that they become a strength. So don't look at losing trades and even being down money like that, um, as like a bad thing. I mean, yeah, financially it is a bad thing, but if you learn the lesson, you can move on. So my thing was, your plan has to be clear, concise, and you need to know exactly what you need to do at all times. So that keeps the panic and the fear and the greed at bay. Because if I'm in a trade and it's going against me, well, now I do stop losses, and a lot of times they're in the computer. So my stop loss take me out. I don't even really have to worry about it. And that was, I was using stop losses, but I was using the mental stop losses. And y'all heard me say, yeah, I didn't use the mental stop losses, and they mentally didn't work for me because it didn't stop me out no trade, because I started smoking a little bit of opium, and that just got me further and further in the hole. Number two, compare your trading plan to what you actually did. Now, if you ain't got no plan, that's the problem right there. You ain't got nothing to compare to. So you know you need to create a plan for yourself, and then you need to work on following it. Identify areas of improvement. For me, it was, I had a plan, but it wasn't very clear. So I had to get clear on what I'm supposed to be doing in my actions in the plan. And it was clear as, if we get to this, you exit. If we get to this, you take profit. If it does this, you do this. So it was a whole bunch of, if this, then I do that. If then statements. And so it was very clear of what I'm supposed to do. Identify areas that you did well. It ain't all bad. Because when you see some of these trades, because I actually pulled them up, I entered where I should have entered. I just didn't exit where I should have exited. So I did things well by, I had good entries. I just didn't have good exits on some of these plans. So never take away the things that you did well, because you want to recognize that and continue to do those things well and then build upon that, and take it as a lesson learned and move on. Like, don't be like, last time when I made this trade, I lost $20, and I ain't trying to lose $20 again. So I don't know if I really want to take this trade because it looked like the last one. Like, you can't hold on to those losses. You got to let them go. That money gone. Ain't coming back. Ain't nobody gonna come back and be like, you know what? I'm really sorry I took your $20. Here, you can have it back. I feel bad. No, that's not happening. So you need to learn the lesson and move on, because the longer you hold on to those losses, the longer you are going to sit there and remain in the state that you're in, which is not being able to move forward because you're too stuck to what happened in the past. You're going to have to grow on beyond that, brothers and sisters. You can't stay there. It was meant to be a learning lesson, not a life sentence. So, how not having a plan causes you to lose profits. So, here is a trade that I took unplugged. And like I said, this had to be, my expiration date was February. I didn't go back far enough. I actually didn't look this one up to see where I entered. But I had a good entry. I was up 11%, $180. Life was good. I had three contracts. So this was the week of February 8th, which is actually the following Monday of when this expired. And I had a high of 751. So obviously I got in. These are calls and wrote it up, but I don't think I got out at this red candle right here, which you can see is I held those three contracts. I was up 11%. Now I'm only up 2%. So I basically didn't execute. So I lost the profits that I attained. So at this point, I'm still green, but it's like I'm just barely green. So right here, I actually went from that was the weekly chart to now I'm on the 4 hour chart. So this was my entry. So I had a good entry. I entered down here, but what I didn't do was exit here and it started to pull back. Now, February 5th was my expiration date. So, and like I said, I didn't look up this trade, but I probably took the little bit of money. I probably took even less than that. Um, so $39, I probably took more like 10 or 15. I had three contracts. You have to pay the cost to trade in the market. So that is 50 cents per each round. So that's $3 that it cost me to take on those trades. So if I made $10, I technically only profit $7. Now, I'm not sure how much I did, but just to give you an example of what you're thinking about when you're trading, that wasn't smart trading. Even though I was profitable, I should have took the 180 and not taken the say $10 if that's what I took. So when I look back at this is what I ask myself anytime a trade does not work out the way that I uh, think it's supposed to work out. Now remember, trading is probabilities. So it's not 100%. I don't care how well you chart, market going to do whatever it's going to do. But what I have to ask myself is, what did I miss? Where on this one, I missed, I was range trading and I missed, I should have gotten out at this range. Now, hindsight is 2020. You could look at this stuff after you're done and be like, oh, yeah, I can see that. I can see that. I should have did this. I should have did that. It's a whole different when the market is open and those candlesticks are moving and you got to do something. So I understand hindsight is 2020, but I had my entry. I did not have my exit pegged, which is how the reason why I didn't take the 180 because I didn't know where I was supposed to get out. That's what I mean by having a clear, concise plan. So yeah, I took some money, but it wasn't very much. And like I said, it was even less because I had to pay the $3 to enter and exit the trade. So let's talk about that $10,000 loss on Zoom that I had. So I can easily look back. So this is where we are. And once again, I didn't go back and pull up my journal and look at like when I got in, but I had a 3/19 expiration date. And I had 12 contracts. Obviously, we could see that things was not going in my direction. And obviously, my brain wasn't working to tell me to get out this trade. Now, just looking at the chart, because this is the expiration date here. So, in real life, there were no candles past that date. One thing I missed. So, once again, I got to ask myself, what did I miss? Now, back then, I wasn't asking myself what I missed. These days, I ask myself, what did I miss? What I missed was I was in an obvious downtrend. That's one of the things I missed. And I'm sitting in calls. So I'm trading against the market right now. Trading against the market never works out well for you. Number two, I missed opportunities here on these pullbacks to exit the trade for less of a loss. But oh no, I decided I was going to hold till the wheels fall off. And the wheels probably fell off. I probably took this $10,000 loss back then. I'm gonna call it a lesson. It was a loss, but I took a lesson from it. I have that. Once again, hindsight 2020. This is all clear because these candlesticks are formed and they're not moving. But in reality, when it's all black or white to the right of those candlesticks, depending on how you got your background, it's a little bit different. You have emotions involved. Sometimes you don't see clearly because you're so emotionally involved and wrapped up in this trade. But obviously, I didn't see we was in a downtrend. I was on the opposite side of this trade. Now, what I hope I didn't do, because I didn't, like I said, I didn't pull this up, is I hope I didn't average down on this. This is why I don't like averaging down. because you're going to average yourself down and out of some more money. That's something I don't do anymore. So I'm in this trade. I'm in an obvious downtrend. I am trading against the trend on the opposite side. I'm in calls. I did not take opportunities to exit the trade at this pullback for less of a loss. I decided to take the mother of all losses. So, what's my lesson? The trend is your friend, and I was trading against it. So, I got what I got. I gave up 10K. So, I got to take my loss, learn my lesson, and now move on. This should not happen again. I should not be taking $10,000 losses. I need to pay attention to the trend. Now, because and this was like one point in time, and this is just in Robinhood, I have other accounts um, that I was trading in, but I was able to see where my mistakes were and not make those mistakes in other areas. So you have to be able to recognize it, you have to be able to analyze it, and then you have to be able to put things in place so that you don't make those mistakes again. That's the important part. That's the lesson you need to learn. So my number one thing when I'm trading is which way this thing going, because I am not trying to be on the opposite side. Because what happens is it's like, ooh, I remember that 10K loss I had to take. I ain't trying to do that no more. That's not my life. I can't be doing that. Once again, I could have took a trip or bought some stuff or did some stuff, not take a 10K loss because I'm trading against the trend. Once again, these are my actual trades. These ain't somebody else's trades. The problem was my trading plan was not clear for me to be able to execute against. That was my lesson. So I had to get clear and I had to basically get that plan in place and get it in front of me. So even now when I trade, even though I know my plan, it's in front of me just in case I have a lapse of memory and forget what I'm supposed to be doing. It's right in front of me when I trade to get me on track. So I don't experience the fear. I don't experience that I don't know what to do. With your plan right in front of you, do what it told you to do. Because when the market is open, you want to be executing. You ain't that is not the time to figure out what you're supposed to be doing when the market is open. You're supposed to do that before the market opens and before you get into a trade. Not once the market's open and you in the trade and you're like, now what I do? Like, I don't know. You don't have time for that because your emotions are going to be high now. The market is moving against you. You're losing money and you're trying to figure out what to do. That's what your plan is for. So all I got to do is glance down. Oh, my plan said if this happens, I do this. Well, I just need to do this. It takes practice to be able to do that. It is not something that's going to happen overnight. It took practice. Now, am I 100% perfect at that? Absolutely not. I am human. There's days I'll be like, forget that plan. I'm going to do what I want to do. And I usually pay for that. I usually pay for that. But I am self aware enough to know when I'm in that state and in that mind frame. So I minimize those losses. I trade really small because I know when I'm there. But sometimes I just want to do what I want to do. And the market's like, okay, I'm going to just teach you the lesson again. I got time. I'll take your money. So when I'm there, I just trade small. I have to adjust for where I am because they talk about, suppress your emotions and do all this other stuff. And honestly, we are emotional people. There's no way you can suppress your emotion. Your money is on the line. Now, I'm not saying you're supposed to be like, oh my God, I don't know what to do and like freak out. It's not what I'm saying. But what I'm saying is, I know sometimes I am going to be emotional while trading. And when I recognize I'm in that state, I have options. I can either exit the trade so I don't have to worry about it, whether it's for a loss or a profit. I need to go. Or if I choose to stay, I am going to have to make my position size small enough where if I take a loss, it really doesn't affect me. Now, which one I'm going to do is depend on how I'm working that day. I don't know. But I have those things in my plan because I am human and these things are going to happen. They just don't happen now with a $10,000 loss like I had back then. So the gains required to break even after loss. So let's just say that $10,000 was a 50% loss on that trade. I'm going to need to make 100% back just to break even. I ain't even made no money. But we're in a downtrend. So the chances of me making 100% back on this trade before the expiration date to break even is slim to none. So you have to keep this in front of you. So when I am trading, this is another little chart. Y'all can get it off my IG page that I have in front of me to remind myself. See, we need reminders because we forget once those things happen and they don't happen as much anymore. We forget the pain and suffering that we'd have been through to get to where we are. I don't want to forget that pain and suffering because I don't want to experience that anymore. So I'm going to keep this in front of me to remind me. So when I'm down like 20%, 20, 25%, um, I got to go because at 20%, I need 25% to recover those losses. I can do that. But when I'm down 100%, I mean 50%, I need 100%. That's a tall order right there. That's a tall order. So I don't even want to put myself in that negative mind frame or have that type of negative energy around me to be down 50% to need 100% to break even. We ain't even talking profits. So you done did all of this. You done got into this trade. You done did this analysis. You done all this stuff. Let trade run against you. You done cried. You done boohooed. You done called your mom and daddy. Said, I can't believe this and whatever. You done all that. And the money's gone, and you still need 100% to become profitable. No, excuse me, 100% to break even. I want to remind myself of what that felt like back then so that I don't repeat that same mistake. I'm not going to say I'm not ever down 11%. I'm not going to say I'm never down 25%. I'm not even going to say I'm never down 30%. But you better believe Renee has you got to go, sister. This ain't working out. You missed something. This trade is no longer valid and you gotta go. And I can take a 30% drawdown. I can get a 50% or 43% uh profit on another trade, which once again only gets me to break even. It gets me back to where I started. It is not profit. It gets me back to the break even place. So even if I take that 30% loss and I go into another trade and I make 43%, I'm basically at break even. Even if I make 50%, I'm still basically at break even. I have not profited, but I done all this work. I done this trade. I done did this. I done did that. I done stressed out. I done cried. I done called my mom and daddy and told them what's going on. I don't know what to do. Why ain't this working for me? Blah, blah, blah. I done went through all this stuff. I'm smart. I got 5 degrees. I done went through college and grad school and all that stuff. And I've done the impossible, but why can't I do this? I've been there because you get that way after a while. And like I said, I'm just being honest. You have to become the trader that you see in front of you today. And you don't become that person by taking every green trade. Because if you never make a mistake, how do you know how to fix it if something does go wrong? So you have to make the mistakes. You have to learn the lesson to learn what not to do. And then if you do it, to learn what I need to do to get myself out this situation. So all these lessons that you take build you up to be who you are. They build you up to be consistent in your actions and in profit taking. But remember, I'm not saying we gonna never take no L's because that's not true. I take them. They just don't look like $10,000 no more. But I take them. So remember this, your trading plan should provide clarity. It should provide structure and guidelines for decision making. If your plan don't do that, you need to write you a new plan, or you need to go in and revise the one that you have and make sure it's clear. You should be able to know if the stock does this, I do that. If the stock does this, I do that. If the stock does this, I do that. It needs to be that clear. You need to make sure it's in front of you when you are trading. So if you ever feel any panic, fear, greed, any of those emotions, you look at your plan and you trade your plan. That's what it means by have a plan and trade your plan. I have it. I'm starting to be like, oh man, I could probably make another $5,000 if I hold this. And then I look at my plan, and my plan says, sister, you're at a take profit. I need to hit the button and take some profit off the table, because I tell myself, remember before when you didn't do that and you got a big red candle to the downside and you hadn't taken no profit? Yeah, hit that button. We get amnesia. We forget those things after a while. We forget that those things can happen. So I have things to remind me of what I should be doing in case my brain has amnesia and I forget what I should be doing. It's right here in front of me. So, the cost of sitting in red trades: by choosing to sit in red trades, you essentially give up your potential gains by not looking for other opportunities. It's hard to look for other opportunities when you in nine trades and seven of the nine are red and they real, real red. Opportunity cost is a fundamental concept in trading, and understanding it is essential for making informed decisions. What is the opportunity cost? What am I missing out on because I am trying to manage this red trade without a plan? So, by recognizing the opportunity cost involved in red trades, you can make better informed choices, allocate your capital effectively, and optimize your trading performance and outcomes. Like, that's what you want to do. So it's okay that it happens, but it's not okay that you don't learn the lesson and try to learn from it and then make whatever that weakness is a strength. Like, you got to go through that. You got to, that's what your that's what your mistakes need to become. That's what your lessons need to become. This is a weakness. I need to identify the weakness. What do I need to do to fix it? Do whatever you need to do to fix it. And then now, what habits do I need to replace so that I can build on this and it now becomes my strength? You do that with every single weakness you have. Now you have a whole bunch of strengths and you have very few weaknesses in this area of trading. Now I'm gonna tell you this. You also gotta do that in your real life too. So where are you weak in your real life? Because guys, I ain't gonna lie, all this stuff ties in together. It just ties in together. Your real life, the life you live in outside of trading, and what's happening in trading. If you're a highly stressed out person and you don't like uncertainty, and you come in here, you're gonna be highly stressed out and still not liking uncertainty. That ain't gonna change. If you are a person who, I mean, because there's some people that like to work, they don't really want to think. So when you're a worker, someone is telling you you need to be at work at 8. When you get here, you need to do these things, you need to get on these calls, and by the end of the day, you need to deliver these things. You have a very structured day, you know what you need to do, and you ain't really got to think. Some people thrive in those type of environments. They don't like uncertainty, which is why they don't go into entrepreneurship or try to become a trader. So if you're a person, you want some absolutes in life, even though there's nothing absolute in life, um, you need to be on the other end of the spectrum, because coming over here, there are no absolutes. This is a world of probabilities. If this trade does this, it might do this. And if it don't do this, I'm gonna take a loss, but it's only gonna be this big. And I'm okay if it run to the moon or if it fall to the ocean. It's okay either way, because I got my stop loss to protect me from the fall. And on the way to the moon, I got some take profits, and I can take you to the moon. I'm just not gonna take 20 contracts to the moon because that's a little risky. Those are the lessons you need to learn. Those are what the things, the way you need to think. Always think of your opportunity costs and the cost of sitting in red trades. Think of, you don't want to be in nine trades and seven of nine trades are red. And furthermore, why are you in nine trades anyway? Because you cannot effectively manage nine different trades. So these are some of my lessons in trading that I have learned, that I have bumped my head up on. Am I perfect? And do I never, ever, ever make these mistakes anymore? Absolutely not. It's just when I make them, they're small now. They don't happen as often, and the risk is a whole lot smaller because I got clear on my plans. I put my plans in front of me, and I don't freak out when things don't go the way I plan, because guess what? The stock market gonna do what it's gonna do, and you just gotta roll with the punches. That is my time. I hope this is helpful. I hope you will look at the opportunity cost of sitting in red trades and decide on an exit strategy and what you need to do to move forward. Y'all take care. Be sure to hit that subscribe button, and I will see you back here in just a little bit. You guys take care.